Hey everybody, it's Chris with Life 180, and I am here with Galen Nuttall from Canadian Whiteboard Finance, and we're continuing the financial education series for Canadians. I think if you've been watching any of these videos, you know that I'm down here in the United States. I work with entrepreneurs, business owners, life insurance agents, and I help them build their businesses. Talking about this financial stuff and getting the financial literacy and awareness is, I think, extremely important. However, I know there are a lot of people that follow the channel that were Canadian that had me reach out to Galen. We met through a mastermind, and he's just a wealth of knowledge. And it's been a fun series for me because I've learned a lot about the differences and the nuances between how it works in the United States and how it works in Canada. And so today's video is going to be pretty fun because we're going to be talking about, how would you describe it, Galen? Planning for kids?
Yeah, so financial planning for kids beyond the RESP.
Okay, cool. Rock and roll. Well, I'm excited about that. I mean, I know we utilize a lot of different strategies that are kind of alternative strategies down here. So I'm really fascinated to see how it works in Canada. So I guess, like always, I'll let you get into it. And when I see differences or I have questions or anything, I'll chime in, man.
Yeah, for sure. So to set the stage a bit, if I were to go out there and ask someone like, "Hey, what are you doing for your kids when it comes to financial planning?"
Mm-hmm.
Most people would say we've got an RESP set up for them, and that stands for Registered Education Savings Plan. So I'm not going to spend a ton of time on that, but the nuts and bolts of it is that once you have a kid, you can put money into it. So most people, if they're able, they put around 2,500 in a year, and the government matches 20%. And that is an account that is allowed to grow tax sheltered, and then you take it out for the purposes of education later on.
Mm-hmm.
So really common, when it comes to marketing for financial planning. Do you have an RESP for your kids? People get home from the hospital and they've got like mail waiting for them, like, "Hey, did you open up that RESP for your kid yet?" Like really, really common. And most people, if that's what they're doing, they're thinking, well, that's everything there is, when in fact there are other things that they can be doing to help set their kids up so that they have access to certain financial products later on, and also protecting against certain things as they're still a kid. So I'll go into that in a bit of detail. Like, so to set the
Rock and
stage,
roll.
like that's what most people are doing, is sort of, and if they can do the RESP, that's fantastic. I have RESPs for my kids. I set them up for my clients. But there's another dimension to it that I find very important.
Very cool. You should have the ability to share your screen if you want. If you want to do that.
Let's do it. I think I've
Rock and roll.
closed my browser window with a billion tabs open, so I think I've got
Nice.
yeah. So to go back to the tree analogy, like I talk a lot about how financial planning is like a tree, and if you've seen any other videos, I talk about the goals are like the leaves at the tips of the branches, which is like the investing component towards the future, which can be a combination of traditional investing and whole life, and then the roots are protecting against what can go wrong. And I'm a big believer in my clients having their kids set up with their own little trees, so to speak, so that
Mm.
they've got a similar setup where they're set up for the future, but they're also protected against what may go wrong. And for kids, a big part of that tree is the RESP. Let me just delete that. It looks like a B. The RESP, which, like I said, Registered Education Savings Plan. And like I said, it's a good thing. I've got them for my kids. Like, it's great to have the government matching the money and all that good stuff. But just as an example, if God forbid one of my kids got sick with a serious illness and I was not able to take care of that financially, I'd potentially have to cash those out to be able
Mm.
to manage that, right? So that's what I'm going to go into a little bit. So one of them, just to sort of like break it down, I'm going to talk about critical illness insurance, and I'm going to talk about how to set your kid up so that they can access whole life insurance later on in life,
Okay.
or have the availability to access it.
Are you allowed to get whole life on kids down there the way you can in the United States?
I believe so. I mean, you can get a lot of whole life on a kid.
Okay,
Yeah, like my kids
cool.
have a lot. Like my kids, I think in all likelihood have more whole life insurance coverage on them than most adults have, because I
Awesome.
know how awesome this stuff is. So,
Yeah, totally.
and my clients do it too. My clients look at it, and when they get it for themselves, they're like, "Wow, like what about my kids?" So, the way I look at it first is, you know, um, like I said, when it comes to the critical illness piece, so the way that critical illness works for adults and for kids is
Hmm.
that if you get diagnosed with one of 21 different illnesses, you get a tax-free lump sum payout to do with as you please. Like, you don't necessarily have to use it towards a medical condition. history of critical illness is fascinating. It was developed by a doctor in South Africa who did the first. He and his brother were both doctors. They did the first heart transplant surgery. His name was Dr. Marius Bernard, and he was saving the lives of his patients through heart surgery. But after he had saved them, like a lot of times if they had a heart condition, and he would save their life by, helping them, but they wouldn't necessarily go back to full health again, or maybe it would take them a couple years to get back to work. And so he saw that, and he actually had patients tell him, "You've saved my life, but I'm still ruined financially because I had to take all this time off of work. I've depleted my nest egg, or if I never went back to work." And so he was not liking this. He's like, "I'm saving lives here, but like people are saying, I wish," people are saying, if I had died, my family would have a whole bunch of money because I have life insurance, but I had the bad luck of getting sick. So it's like the unsuccessful heart attack, what to do. So he sat down with insurance companies and said, let's come up with something. So he came up with critical illness insurance, and it's something that has exploded over the last couple of years. I think I looked up some statistics about how 15 years ago, I think there was 13 million in coverage in Canada. Now there's over $1 billion in coverage in Canada.
I've never heard of critical illness insurance purely. I've heard of critical, accelerated benefit riders with, if you become critically ill with your insurance policy, can be pivoted. So you're saying there's an actual critical illness independent coverage policy for kids?
Yeah. Nice. Critical illness. Okay. So I have critical illness, my wife, my kids, all of us have critical illness insurance. It is a separate it's a separate entity from our whole life insurance.
Different than disability.
Yeah, we got so I have disability insurance, I have critical illness insurance, and I have whole life insurance.
Okay, rock and roll.
Yeah. So it's a separate entity up here. So the way it works with kids, especially, is the cool thing about kids' critical illness insurance is not only does it cover the same illnesses that adults does, but it also covers extra conditions that kids may develop that adults don't, like childhood leukemia, for example. There's different things that kids can develop that adults don't, that are also covered. The other cool thing about kids critical illness, so I'll just when I'm talking about this route, it's let's talk about I'll just say CI down here for the coverage. So the other cool thing about critical illness for a kid, you can do this for as adults too, but with kids, it's actually a bit of a cooler option where you put away the premium. So let's think of this as the premiums that you're paying monthly are going into, and it's adding up every month, right? Just like any type of insurance, you're technically putting away money, right? Mm-hmm. Now, the cool thing about the critical illness insurance is you can structure it such that if your child does not become ill and does not cash it out while they're a kid, they can actually get the money back later on in life. Okay. They get to keep the coverage. So it's called return of premium critical illness. Okay. And I'll shorten it as ROP. Adults can do this, but kids can do this. And most of my clients, if they're getting critical illness on their child, they're usually setting it up this way, because the cool thing is that money comes back to them. It's money that they've put away, and it comes back to them if they never use the insurance. And part of what people find appealing is they're like, well, what if I never get sick? Am I just throwing this money away? And it's you have the peace of mind. 20 years from now, I will have dumped thousands of dollars into car insurance, but at least I knew if something went wrong, I was covered. Sure. I'm never going to get any money back, but at least I'm covered. With this, it's you get the money back and you get to continue sort of a new version of the coverage as an adult.
How long has that been around?
Critical illness insurance, I think it was developed by Marius Bernard in the 90s.
Okay, so the return of premium, has that always been available, or is that?
I'm not 100% sure if it's always been available. I mean, certainly since I've been an advisor, it's been available. Okay. Yeah,
it's interesting. It makes me think about the return of premium insurance wave that happened in the United States with life insurance. So people were getting return of premium. They had a big problem with it because there was a wave of people getting loans to cover their insurance. Right. And so they were able to buy, and I guess this is different because in this scenario, they were able to buy as much life insurance as possible because it was a return of premium. So the financing companies would guarantee, they knew their loan was guaranteed by the return of premium. Right. So people were buying way more life insurance. So these life insurance companies got massively exposed by all these people getting tons of life insurance that they never would have had otherwise. You know what I mean?
Until they close that loophole.
Oh, totally. It's nuts. And so something to think about.
Oh man, people are smart. Yeah, no, this is different. Yeah, like you're putting the money away and then eventually you'll get it back. Like
Yeah.
it's not something you get back like tomorrow. Like it's
Okay.
yeah,
Yeah.
and it's also like, yeah, they've definitely thought it through in the sense that like you have to get it by a certain age or else it's not 100% return of premium. Like it starts
Okay.
scaling down the older the kid gets.
Gotcha.
Like it's
They
not like you
ladder
can
it
dump.
down.
Yeah, it's not like you can dump like a ton of money in this and then a year
Okay.
later you get it
That's
all
cool.
back. Like it's
Yep.
definitely, yeah, they've thought it through. So
Nice.
I'm a big fan of critical illness insurance. I mean, the big reason, so typically when I look at it, it's hard to know exactly how much to get, but my rule of thumb is if someone has a child, I recommend that they get approximately 2 years of their own income.
Mhm.
Because I think if one of my children, God forbid, got sick, I would want to be able to say, look, I need enough money to like to pay someone to run my practice or like take time off. Like I want enough money around to just not have to even think about work. Like my daughter was in the hospital a couple years ago with a very minor thing. She ended up being fine, but she was in the hospital for like 5-6 days, and that never happened in my life before with one of my kids. I
Yeah.
couldn't think straight for like 5-6 days. Like
I feel you.
my productivity was like through the floor. Like
Yep.
I think I had like 2 client meetings. Like I was basically like sitting in the hospital, like in her room on my laptop, trying to stay on top of things. We had
Yep.
takeout containers all over the counter at our house because we were just kind of doing shifts of like, anyways.
Yeah.
So like if either of them came down with something super serious, like I know that would take a dent in my ability to earn an income, especially as a self-employed.
Yeah, I mean, your number one priority is a husband and a father, right? So it's
Yeah,
like you want to
exactly.
you want to make sure that you have yourself set up financially. So if any kind of emergency does happen, you can actually show up powerfully in their lives that way.
Exactly. And not be thinking,
Peace
oh,
of
did I
mind.
send that email or did I fax that form or whatever?
Yep.
Like I'd
Yep.
be able to just hand
Totally.
that to someone else and like they get paid what they need to get paid or whatever it
Yep.
looks like, right?
I
And
love
like
it.
whoever's listening, like your business is your business, like the way you structure your business, like having money available to do what you want or having money available to go get treatment.
Totally.
Like there might be treatments to save my life or my children's lives that costs a ton of money. And I don't
Mhm.
want to have to think about how much I have to go into debt to afford it. I'd rather be like, yeah, do I need to fly somewhere and get this like
Yeah.
special surgery somewhere? Like cool, like I've got the money for it now, like let's do this. So
Yep.
that's
I love
another
it.
thing that I think about, like just having money available to take care of a problem. So so as
Do they
always, like, yeah, go ahead.
do they do these critical illness riders like they do in the United States on whole life insurance policies? Like, can you bake some of this into the policy as well? Like, if you become, like we call them ABRs, accelerated benefit riders, if you become critically, chronically, or terminally ill, you get access to a portion of the death benefit while you're alive if you qualify and
Yeah,
meet
it's a really
certain
good.
conditions.
Yeah, it's a good question. I haven't seen it for critical illness. I have seen it for shortened life expectancy and terminal illness,
Okay.
where you can access a percentage of your policy. Definitely,
Okay.
I've seen that.
Okay.
It's obviously rare that this happens, but because usually life insurance, it's like someone passes away, it gets paid out. But
Yeah.
yeah, we do have early access if someone
Okay.
is shortened, either terminally ill or like extremely shortened life expectancy. They have to
Beautiful.
prove it obviously to access it.
Yeah, of
But
course. Of
as
course.
far as critical illness goes, I don't know. I have not seen that yet on whole life, or sorry,
Okay.
on life insurance in Canada where a
Okay.
critical illness would trigger access.
Okay.
It's the terminal. I have seen that.
Okay. Cool.
So, so that's the big thing is like the critical illness piece. It's a very strong route to have, in my opinion, for every plan,
Mhm.
because like I would not want to have to cough up 200 grand
No.
to deal with a problem. I'd much rather be like, here's the doctor's report. This is what my child has. Here's the $200,000. And the other thing I'll mention is critical illness. There's a part of it that's called best doctors. It's a pretty cool thing actually, where if someone does get diagnosed, they can access this program. So like they get diagnosed with a disease and like all the doctors in this program have agreed on who is the world leading specialist on this specific disease. And you can
Wow.
have your file sent to that doctor and they will Skype with your doctor and talk about a treatment plan. And so I've
Oh,
actually
wow.
seen people, like I've seen, there are cases where people have like, they've had an illness where they thought they were going to lose their sight and they ended up not losing it because they accessed the best doctors program and they got in touch with the best doctor in the world with this specific disease who was telling their doctor, yeah, you need to do this way to make sure that they don't lose
Oh,
their
wow.
sight. Yeah, so it's a pretty cool thing that you have access to as well,
That's impressive.
with that. So then the second thing, so that's critical illness. I'm a huge fan of critical illness. Like it's kind of, I think it's especially neat that a doctor thought of it
Yeah,
because he's like, I'm
that's
saving
amazing.
lives, but I'm ruining finances. And he did not like that. Then whole life, you know, as we've talked about, like the access to this. So first off, what I'll say is, like, when it comes to insurance, basically when someone is born, I call it like there's like this envelope of money that's available, and you have to apply for it. So like, just as an example, like my own children, they each have whole life insurance policies, but I had to actively go out and apply for it to have access to it, right? And if either of them, or myself included, if I had gotten, you know, a diagnosis of a strange disease, or like, you know, some sort of result from a medical exam that made me uninsurable, that envelope basically gets torn up, or at least they scratch my name off of it, and they say like, yeah, you no longer have access to this because you don't qualify anymore. So I'm a big fan of setting kids up to, like, first off, starting with a nice whole life insurance policy that's going to grow over time for them. That's like is like, if you can afford it, if it makes sense, if you can swing it. This is a lot of work that I do. Like, grandparents are a good fit for this. Like, basically I'm like, because like in Canada, you can't start a tax-free savings account until you're 18. So sometimes grandparents like the idea of setting their grandkids up for success. So I'm like, what if you could help your grandkids out? What if they could have a TFSA today? Would you fill it up for them? And a lot of them are like, yeah, totally. Like, why would I want them to miss out? And I'm like, well, why not take that money that you would put into a TFSA if you could, and put it into whole life insurance? Because it's going to have a very similar result of tax advantage growth, tax advantage access. You know, you're going to lock that death benefit in for them for the future, like for them when they're, you know, having their own kids, that they've got insurance in place. So that's like the first step, is like getting that done. And B is just locking in that that ability to exercise future insurability. So like, as a kid, you know, a kid may not need $200,000 of insurance or $1 million insurance, but you can lock that in so that down the road, let's say, they know that they've got a guaranteed amount of insurance that they can access
For sure.
in case something does happen along the way. Like, I know people who, you know, their kid went for a brain scan and it came back, and the kid's, you know, in all appearances perfectly healthy, and the doctors say, you know what, we don't know this condition very well. Insurance companies say, we don't understand this condition very well. We're just not going to insure you because we don't know enough about it.
Well,
And
even
yeah.
so, like, I mean, my parents didn't get insurance on me and my brother when we were growing up. And my brother, at 23 years old, got diagnosed. Well, we found out he had Crohn's disease. He had always had, like, and so ended up having polyps and all these things going on, had to have a portion of his intestine removed at 23 years old. And like, so now he's high risk, and he's not even really able, he could probably get insurance. Like, he's been dealing with it and living with it long enough, but the problem is he's had so many health issues and has to go to the doctor. And like, so there's this constant, you know, record of him having to deal with this. And so that massive red flag, he's never going to get insurance. And if he does, he's going to be rated,
he's going to have to pay 4 or 5 times as much.
It's going to be bad. And so, and there are so many people that deal with that. It's not a matter of like, are you going to die? It's like, life insurance is something that you need to get as early as possible, because there's no guarantee you're going to qualify for it tomorrow.
Yeah. I mean, everyone who lives long enough, or, you know, hits a day where they no longer qualify. And so then they can no longer have someone else's money solve their problem. It's all their own money that has to solve the problem. So those are the two big things: the critical illness and the whole life. I mean, I put my kid, like I said, I mean, and my own kid's whole life insurance, I structured it such that it's going to accomplish one of 3 different things. Either I'm going to access it while they're alive, like in my retirement, if I really need it, they're going to access it if they really need it, or they're going to leave it to their own children. So this is a plan that I put in place when my kids were like 5 years old, that may benefit their children like 70 years from now. Like, this is a plan that may actually take place in the year like 2100 and something, because if that's when my kids finally pass away and they never needed it, then their kids. So it's like a huge legacy component. So a grandparent, you know, could be like, yeah, my great grandkids are going to remember my name because in the year 2000, you know, 120, like, they inherited all this money from my grandkids. You know, like, it's a pretty cool process. It's a pretty cool concept to put into place.
That is awesome. So just before we go, I do have one question that just kind of like popped up in my head with the RESP that you guys do in Canada. And this may warrant a different video altogether. I don't know how far down this rabbit hole we want to go.
Yeah.
You said that's the equivalent of your 529 in the United States, essentially.
Maybe. I don't know what a 529 is. So
Oh,
it's an education plan, but like, yeah.
529 is an education plan. And so
Okay.
it's where parents can save for their kids on a tax preferred basis. It kind of works like qualified money, but you have to use it for qualifying expenditures, which is education typically, right? And so, and there are a couple exceptions to the rule, but for the most part, it's used for education. And so what I heard you say is the government matches.
They match up to 20%. They match 20%
Okay.
up to a maximum of 500 a year. So
okay, so the U.S. doesn't do that. I think there's tax credits or whatever, which change constantly, like whatever. But so do you utilize whole life insurance for college planning and all that stuff the way that we do down here?
I mean, it's definitely something that I've looked at. Like, I mean, like I said, my own kids could potentially borrow against their own policies to pay for school if it makes the most sense. Like when it comes time, we'll just figure out what makes the most sense. But yeah, you can use whole life insurance to plan for. I mean, like I have a buddy who he has a cool presentation. It's like the story of whole life, and he shows where he borrowed against it for college, where he borrowed against it to like buy an engagement ring for his fiance, where he borrowed against it, like all these different stages of his life where he borrowed against it. So so I don't know if it's exactly the same as the States, but you can definitely, it's definitely an option.
I mean, I think it's different. The way I look at it is I'm not a big 529 fan down here because the benefits, I mean, nobody's contributing except for me. I don't really care about the tax benefits. I don't like putting money into an account I can't control. You know, what the use case of that is. I'm not necessarily sure I even want my daughter to go to college, like any of my kids. Like, so it's kind of one of those things, like they may, if they come to me and say, hey, daddy, I want to be a doctor or a lawyer or, you know, an engineer that requires going to college. Okay, that's great. But if they say, hey, I want to be an entrepreneur, I want to be a financial advisor or coach or, you know, do all these different things.
You'd be like, don't go to college.
I'll take their college tuition. That would be $100,000 or $150,000 or God knows what it'll be at that time, right? In 10, 15 years, I'll take that and I'll go give that to somebody to mentor them, you know, which is going to be a way better. So like, I think it's important to really understand what your values are and what you're really looking to intentionally accomplish before you go putting your money, at least in the United States, like before you go jamming your money into accounts like that, realizing like, what are you actually going to get out of them? Like, what are the results that you're looking for? And so, you know, I don't know.
Oh, absolutely.
I'll get off my soapbox, but like,
I know. And I mean, there's definitely a whole other conversation around, you know, what's the future of higher education? What's the future of entrepreneurship? And like, for sure, like if my kids came to me and they said, I want to be a doctor, absolutely. If they said to me, I want to be an entrepreneur or own a business, I'd say you probably shouldn't go to school for that, because most of the people I know who have necessarily, like, it's not necessarily but just like you said, I would pay someone to mentor them with life experience rather than go to a school to learn outdated information around building a business or marketing or whatever it might be, for sure. So, but I mean, I will say, like in Canada, there is that government money that pops in there. There's a fair amount of flexibility about what you can use the money for. You can share it among family members if you have to, like you can share it among kids. It's not like individual kids that have it. It's usually, even if kids don't end up going, like even my own kids, I'm like, they may not go to school. Like they see me and my wife as self-employed entrepreneurs. Like they may say like, forget this, I'm going to do what they do. I still do it because the benefits still outweigh the risks of tying up a bit of money in it because of the matching and all that stuff. But it's definitely something to look at. Like I wouldn't blindly put everyone into this for sure, because they need to understand, okay, like what's the benefit, what's the cost,
what are the options if the kids don't go to school, those sorts of things, and
absolutely
what happens to it all. Well, that's awesome, man. Well, rock and roll. I think this is awesome. Thanks for sharing that. And guys, if you have kids, if you're looking to plan, if you're in Canada, you have any questions about personal finance, reach out to Galen. He's amazing. Amazing heart, just looking to serve. If you have any questions, I'm certain he can help you kind of get to the answer to the questions that you have. So that's it. And what I'll do down below is I'll put a link if you want to talk to Galen. Just go use that link. It'll bring you to a page. You can set up an appointment with him. It'll be fantastic. Very seamless, very easy. But anyway, I hope you found value in this video. If you did, make sure you hit that like button, hit the subscribe, hit the bell, that way you get notified. Galen and I are trying to do these videos on a very, very regular basis to add value, you know, to all you Canadians up there who are looking for help on this sort of stuff. And that's it. So guys, go have a blessed, inspirational day. Thanks for being here, Galen.
Thank you so much.
All right, man. See you later, guys.
See ya.